What's up, traders and OnlyFans faders? Welcome back to Trades and Gains, where the Fed ruins weekends, Walmart saves America, and Jackson Hole isn't a cowboy bar. It's where your retirement goes to live or die. This week, it's all about Jerome Powell's swan song in Wyoming, Walmart earnings, and whether Target can stop bleeding money faster than AMC sells popcorn. Let's make like some butt cheeks and dive straight into this. So, Jerome Powell is giving what's likely his final big speech as Fed chair at the Jackson Hole Economic Symposium. For those who don't know, Jackson Hole is this beautiful resort in Wyoming where central bankers gather every year to signal economic policy. Think of it like Coachella, but instead of Beyonce, you get Powell mumbling out core inflation trends. Markets are already pricing in an 85% chance of the Fed cut rates in September. 85, which means if Powell doesn't deliver, the S&P will drop faster than a Kardashian marriage. Now, Powell's nickname in DC is Too Late, and that's fitting. This man waited too long to cut rates and then waited too long to hike rates. And now he's going to wait too long to leave the stage. If Powell was your Uber driver, you'd still be at the airport baggage claim while he's arguing with the GPS. The real question is, how aggressive will he be? One cut, three cuts, or is it just another we'll wait and see moment, which is Fed speak for we have no idea what we're doing right now. So next thing, let's talk about America's heartbeat, retail. This week, we've got earnings from Walmart, Target, and Home Depot. Walmart is the big one. Analysts expect same-store sales up 4%, which is wild when you think about it, because Walmart isn't just a store anymore. It's basically America's economic report card. You want to know how the average consumer is doing? Don't check the CPI, check the Walmart parking lot. Target, on the other hand, not so hot. Shares are down almost 20% this year. The leadership is in question, and honestly, their main strategy seems to be put Starbucks in the front and hope people get distracted. And then there's Home Depot. The housing market's in what are some calling a recession, which is bad if you're selling lumber, but good if you're selling for sale signs. The bottom line, these three reports will show us if the U.S. consumer is still spending or if everyone's maxed out their credit cards on Taylor Swift tickets. Now, midweek, we will also get the Fed minutes here for the July meeting. Spoiler alert, there was dissent. Powell wanted steady as she goes, while two Fed governors basically said, cut the damn rates already. Translation, the Fed is now arguing like your family at Thanksgiving. Nobody agrees, but they all pretend when dessert comes out. And Thursday, we'll get jobless claims data. If claims keep creeping higher, Powell may have no choice but to slash rates, not because he wants to, but because no Fed chair wants to go down in history as the guy who tanked the job market in an election year. So last week, the S&P 500 hit record highs twice, but here's the kicker. It wasn't just tech leading the charge. We actually saw rotation into sectors like healthcare and home builders. That's like seeing people finally switch from streaming Netflix to reading books again. It doesn't happen often, but when it does, it means maybe, just maybe, this rally isn't a total bubble. Still, let's be real. Nvidia and big tech are still running the show. Nvidia reports earnings next week, and if they so much as sneeze, the NASDAQ will either rip another 5% or collapse into the Earth's crust. There's literally no in between. So what's the setup here? If Powell hints at aggressive rate cuts, the markets will melt up. If he waffles, expect volatility. If Walmart shows strong consumer spending, the soft landing narrative grows stronger. But what if Walmart cracks? Oh boy, if America's bargain bin collapses, then the rest of the economy doesn't stand a chance. It's that simple. This week is Jackson Hole plus Walmart equals your portfolio's fate. So here's the bottom line. Keep your eyes on Powell, Walmart, and jobless data. Everything else is noise. And remember, the stock market may hit record highs, but for the average person, it still feels like we're paying $18 for a Chipotle burrito, which in a way we are, because Powell waited way too damn long. This is Trades and Gains. I'm your host, Max Pitts, reminding you that Jackson Hole may be beautiful, but this week it's basically the world's most expensive open mic night for monetary policy. Thanks for sticking around. Make sure you like, subscribe, hit that bell notification. Stay frothy, stay smart, and I will see you guys in the next one.